Yeah, hi. Good evening and welcome back to Decalect Season 2. And I suppose this is our new session for some of you at least. I can see quite a lot of new people here. And we've been in this series for almost a month now. Decalect, as some of you might know, is a series of 10 lectures. And we at the Department of English organize this in once in every 2 years. And in this season, we have focused on culture as our theme, as our thrust area. And we've been, running courses on culture for almost a month now. And we've passed halfway through the series. And this is Adila's is our sixth presentation. And in the preceding presentations, we had dealt with different topics that are related to culture in one way or the other. We've looked at sports. We have looked at we've looked at film. We have looked at culture in terms of borders. And then we have looked at museum, how the idea of a nation and nationhood interacts with the items preserved within that geographical space. So we've been looking at culture, the idea of culture from different angles. And recently we had a presentation. The last one we had was on the printing culture, the come of age of the printing industry, especially in Kerala. So in all these presentations, what we were trying to focus at were two things. One, the presenters are not all academics. Some of the presenters are experts from fields who are not academics, right? And some of the presenters are academics. So we have this blend of presenters from whom we have different tastes of the culture, different ways of looking at culture. That's one thing. Another thing, we have tried to go away from the Eurocentric perspective of a discussion of culture in an academic platform. So for that, what we have tried is we have tried to bring in, people from different fields and ask them to, reflect upon the idea of culture, idea of societies functioning, the everyday life of society. And through that, we are trying to, deduce an idea of what is happening in the culture or an analysis of our culture. So in one way or the other, what we are trying to do is to integrate these multiple disciplines into the academic discipline called the culture studies. And in that mission, we've been running through different sessions. We had, experts from fields like printing, publishing, and then we had experts, people who are into traveling. So they talked about culture beyond border. We had professors, faculty members in academic institutions. All of them are giving their thoughts. And in today's presentation, we have Ms. Athila Aziz with us. And Athila is an expert in financials, editor in financials markets and research reports in investment market. So what we are trying to look at through Adila is how is this investment industry, let's say, or the market of capital investment going around, and what is the kind of insight that we have to take from the happenings there. What is the kind of turn of events that are implicative of some actions that we should take up. So Adila might be able to share us some of her thoughts from that perspective, because especially she has two relations with us. One, she was in this field of academics. She has her master's in English literature from the University of Hyderabad, and then she is into the editing of financial reports. So she can know the both sides equally well. She know what the literature student thinks or how the literature students look at things, and then she has the expertise from the field. So she should be able to guide us through some of the concerns that we have about the capital investment field. that's our thoughts. However, we have left, as we have left with every other speakers, we have left the topic entirely free to the presenter's discretion. So she will talk whatever she wants, whatever she thinks worth knowing for the students of culture studies. So I suppose I should leave the time for her with these words. And with due respect, I'm more privileged in this occasion and more than happy, because more than everything that Adila is as a presenter, as we have described her in the brochure, she's my own sister. So I'm kind of doubly enthusiastic about this situation, about this presentation, particularly because I could after all these years of experience, I could see her coming into an academic discussion on a professional platform. So this is more than happy to have this incident, the program happen. Anyway, thank you, Atila, for accepting the invitation. And it's been a difficult time for both of us, to schedule this thing because of many constraints related to our family and everything. And she's been planning to visit PSMO earlier, then we had to change it into an online mode. So, however, finally we could make it here. So thank you, Adila, for accepting the invitation. And thank you to the participants. We have more than 60 participants, I suppose, here. And some of my family members are also here. So welcome all, and thank you for coming in. So Adila, I suppose the floor is open for you.
Thank you, Naufal. Yes, we call each other Naufu and Adi, so let's forget the formal names and all of that. But anyway, thank you to Naufal for this opportunity, primarily to him, because he's the one who actually introduced me to this whole concept of speaking in front of a few number of students, which I've not done really before. So if I do slip up, please forgive me. Forgive my errors. This is something that I'm doing for the first time. But this is also a talk on a field of study that I'm really interested in. So I am really thankful to PSMO College for giving me this opportunity. And, without further ado, I think we should just get into our field of discussion. Shall we start? Naufal, can I share the screen?
Yeah, go ahead. Sure.
Cool. All right. Let me know if you can, if you guys can see when I share it. All right. Cancel. What is going on? Can you now see? I'm sharing.
Yeah, it's fine.
All right, great. So, before I get into this area of study, just to, brush up on what the financial services industry is. Before we speak about investment sector as such, just to give an introduction on what the financial services industry does and what kind of an industry it is. Primarily, let me introduce it, very grandly, saying that it is one of the largest, most influential sectors in terms of economic influence, right? When the financial services sector of any country or a region is doing well, is performing in strength, it necessarily has a beneficial impact on the rest of the economy as well. I'll start with that very grandiose statement on the financial services sector. And now let me just quickly go through, for the sake of all of you who may not be familiar with the industry, because most of us think of the banking, because of easy access to or proximity to the banking sector. We all know the financial services, or we all think of the banking industry primarily when we think of financial services, right? So therefore, I'm not going to spend much time talking about the banking industry, just to say that we have, in the banking sector itself, we have what we call personal banking sector, we have, which is what our regular interactions with the banks that we have. This is our banking, personal banking or retail banking as well. That is, these are the two names of personal banking that we have. And then we have the corporate banking sector, which is banking related to the corporate industry, to big companies and conglomerates and the corporate sector basically. And then in the banking sector, we have the investment banking sector, which is a very a niche segment of banking, in the sense that most large banks are the only ones that provide investment banking services usually. The reason being that investment banking in itself is something that deals with a very niche segment of people in terms of high net worth individuals. For example, we have Sachin Tendulkar, who has a lot of wealth, for example, to invest in different markets. Or let's say Cristiano Ronaldo, people like that, who have lots of money available with them, but they may not be aware of what to do or how to invest or how much to invest their resources in different sectors. So therefore, what they do is they approach investment banking advisors, and these investment banking advisors help them deal with their money. Right? So that is the banking sector, quick overview of the banking sector. Now, primarily, I will deal with non-banking services sector. Why? Because our area of interest is mostly there in this field of the financial services sector. I'll look at investment advisory a little later. First, let's look at insurance and others, right? Now, insurance, fairly self-explanatory. It is the insurance industry. It is a very large, huge segment of the non-banking financial services sector. Now, when we talk about insurance, we have the regular, what we're familiar with: health insurance, life insurance, property, casualty, all of these insurance industries. And then another very prominent player in the insurance sector is the reinsurance sector. Now, what are reinsurance sectors? These are companies that provide insurance to insurance companies. Because see, insurance companies themselves deal with so much money that they don't want to take the risk of all of that risk that is involved in providing insurance to so many different sectors of people. And so they take out insurance with reinsurance companies. Right? Now, reinsurance companies are huge. So if they have to be able to provide insurance services to other insurance companies, evidently they would have to have huge resources as well. Now, in the others category that we have here, I will look at two categories primarily. There are other categories as well, smaller categories as well under others, but I'm not going to deal with those here for our discussion. Now, what are REITs? REITs, it stands for Real Estate Investment Trusts. Okay. Now, these are basically real estate companies, but on a much larger scale than your usual real estate companies. They basically function as trusts. How do they function as trusts, and why do they have the position of a trust? Is because they have ownership of property, yes, real estate, yes, but also they take in investments from large investors for the properties that they buy. Now, before I go into that, let me, I have forgotten to introduce what REITs are. REITs basically are companies that own, operate, or provide financing to income generating real estate. All right. These companies operate large real estate properties and also take in shareholders in terms of taking investments from large investors. And then they gain the REITs, the primary source of REITs is the rent that they get from the properties that they own. All right. However, they also have to share this revenue that they get, the profits that they generate, to the shareholders that have invested in these companies, in the trusts, which is why this is the REITs are considered a non-banking financial service as a separate category. Is that okay? Is that clear? If there is any question, please interrupt, just stop me. And I know this is a field that not all of you may be familiar with. So just stop me and ask questions, all right? If there is any question on REITs, please let me know. And securities. Now, securities are a very separate category. They're from REITs or insurance companies. Securities are basically any financial assets that a trader can buy or sell in the stock market or in any financial market, not just the stock market. Stock markets are just for stocks or equities. For securities are any kind of financial assets that you can trade in the financial markets, in the specific financial markets. Stock markets, we trade stocks or shares as we know them. Debt securities are basically loans that companies can take out from investors. All right. Derivatives are similarly, products that function similar to debt securities and all that, but with a few differences. Again, hybrids are also a mix of our securities that have functions similar to stocks as well as debt securities. So these are the primary, sections that we have under securities, that we have products that we have under securities, that we can trade under securities. All right. Is there any question that you guys have on this? Okay. Now, why does a company need to have access to equities or stocks or debt securities or derivatives, right? The primary function of these is to provide financing to companies. One way the companies can access financing is, the usual route of going to a bank, taking out a loan, and using that money. However, for large companies, bank loans are not very effective, are not very efficient. They come with a lot of conditions. They also come with larger interest rates. So it is a very restrictive form of financing for large companies in terms of being able to access that financing. It's not a very efficient source of financing, basically. Now, which is why we have all of these other options for companies to gain access to financing. Which are these options? The securities options. All right. Yeah. Now, I'll quickly take you through what we mean by equities and stocks. Just quick overview of what equity securities and debt securities, how they differ. This is to why I'm going into a little detail on this is because it will take you to give you a better understanding of how or the need for investment advisory functions. So investors in an equity security, what happens is that investors buy shares in the ownership of the company. All right. It will be a small little share, maybe a $50 share. It can be higher shares. That depends on the kind of investment that the investor is interested in. In contrast to this, a debt security is a kind of loan. The only difference is that this loan is not taken out from a bank. This is taken out from investors. So investors function as the lender to the company. All right. Now, in the case of equity securities, when a shareholder, because of the ownership nature of the shareholders, investment here, the company has absolutely no obligation to pay any kind of payments to the company, to the investor. All right. If the company decides to, let's say the company was supposed to pay out a dividend. What is a dividend? It's a share of the profit, which the investor should have earned, which the shareholder should have earned at a specific time, let's say a quarterly or a half yearly or an annual dividend. Now, companies can choose not to pay shareholders their dividends. All right. And they can choose the time that they want to pay as well. Maybe after 3 years, they decide to pay dividends. Maybe after 2 years, maybe every year as well. Some companies do offer quarterly dividends as well. So there are different, this is at the discretion of the company, the equity security. Now, the debt security works in a completely different way, primarily because it is a loan, right? There are different kinds of debt securities. One would be a bond, which is a fixed income security. There are other variable income securities as well, debt securities as well, which, let's not go into that much detail. But yeah, debt securities, companies basically are supposed to, by contract, they have to make a fixed payment of interest every month, right? Or on a fixed schedule, whatever the schedule is fixed, as fixed by the investor and the company during the contract signature, during the agreement, that payment schedule has to be followed. The fixed amount, right, of interest, as well as the final principal amount that was taken out by the company, that also has to be paid out, let's say at the end of 5 years or whatever the term of the deal is. So, and if a company decides, or let's say this company is not able to make the interest payment. Now, in the in case of debt securities, there's a high level of security involved in terms of this very low levels of risk of non-payment. There are companies that end up being in default because, maybe because of bankruptcy and for whatever reasons, they lost out on a lot of investment, let's say. And what happens in that scenario is if an issuer misses out on interest payments, the bondholders are the people who have provided the investment, basically the investors. They're called bondholders. They can actually push this company into taking on bankruptcy procedures. And what happens in a bankruptcy procedure usually is that the company may be forced to actually sell its or liquidate its assets. And the amounts of funds that it derives once it liquidates its assets, these funds are repaid, are given back to the debt security holders or to the bond holders. They have highest priority in terms of being repaid. The lowest priority in a bankruptcy scenario is to stockholders or shareholders. Why? Because of the ownership nature involved of their investment involved here, right? So if a company does not pay dividends to stockholders or shareholders, there is no violation of any payment covenant and no default situation involved. The company can choose to do that, but that is not the case with debt securities. All right. Now, if you look at the last point, I've given some points here: market sentiment, company performance. Here I've given credit history, prevailing interest rates. Now, these are different factors that affect investor sentiment about a company. All right. Why would investors or what drives an investor to put their money into a company, whether it be in debt securities or equity securities? In equity securities, company performance is important in both in all kinds of investment scenarios. The performance of the company is basic. Fundamentals of the company: how is the company doing in terms of generating revenue? How is it doing in terms of generating profits? What are the kinds of relations it has with in the debt market or the equity market? These are factors that influence market sentiment or investor sentiment. All right. And what does that mean? Investor sentiment means how ready is the investor to put in their money. All right. In terms of equity securities, market sentiment, such as, let's say, market sentiment. What can I give you as an example? Yes. Let's say a company decides to sell a part of its business division, one of its business divisions. And that business division was what was keeping the company, afloat in the market. Now, that can completely change market view on this company. And shareholders, what they do is sell. As soon as they see such news, they start selling the shares of the company that they own. And because of such a trade happening in the market, the share prices go down completely. All right. Now, in terms of debt securities, when we look at credit history, what does credit history mean? It means how well has the company been doing in terms of paying back the debt it has taken on through the years. All right, credit history, that in terms of the credit that it has taken on or over the years, how well has this company been doing? That will affect investor decision. All right. Prevailing interest rates. Now, interest rates in the are decided based on the industry that the company is operating in, or the specific. Let's say it's only a few companies in that industry, maybe who have taken out debt. What is the general rate of interest in that among those companies? So these kind of things impact the interest rate that is discussed with the investor when the debt security is bought. All right. Now, all of these factors, the company performance, the credit history of that company, what is the general market scenario around these company stocks or debt or fixed income or debt products? How does an investor get access to this information? That is where investment advisory services come in, which is also where companies such as mine, where I work, that also come in. All right. So investment advisory services basically provide advice on investments to investors. All right. People who are interested in, or let's say mutual funds, or let's say financial advisors, or fund managers. These are all the kind of clients that the investment advisory is built around. All right. And investment advisory, investment research, these are huge functions in companies such as Acuity, where I work, Society General, where I worked earlier. But it is also the, one of the company. There are these companies called rating agencies in the financial services sector. These are also huge investment advisory providers. Now, rating agencies, what they do is they give ratings to every company that is listed, that they cover, that is under their coverage. A lot of companies come under this coverage, basically. And these companies are all very active, usually on stock exchanges or debt security markets. All right. And these rating agencies, I'll tell you the names of the major ones. Three major ones are S&P, Standard & Poor, or there is also Moody's. There's also Fitch rating agency. These companies, they primarily provide, their primary product, is the investment advisory or investment research and investment advisory. They provide ratings based on the research that they do. And these research products that they publish are bought by investment or, those investors or fund managers who are active in the financial services industry. All right. Now, this is a quick look at, the financial services sector as a whole, just to give you an idea of where we are placed in terms of the financial services sector. All right. Now, one other area, a key area of interest that I would, Naufal did tell me to look at one key area of interest that maybe, the investment industry is really interested in. So I thought, one of the most important ones right now is ESG. All right. And before we get into ESG, when we think of the word investment, we think of primarily what? It is a means of growing wealth, a means of growing up your own funds, right? When the primary aim has always been, the notion of traditional investments. When we think of investments in the traditional sense, it was always revolved around returns. What kind of returns are possible from me putting this money into a certain, share or debt market, right? Now, that is also the simple reason why we have, such activity going on in the stock markets, and every day we watch it so carefully. The news is always around the stock and debt, debt and or the trade exchanges basically going up and down. So why is there so much interest? It's basically because of the of because the industry is such a huge one that it deals in so much money that there is so much interest in it, right? Now, this is the notion of investment as we've known it for many, many years. And investing in assets such as stocks, bonds, real estate even, these with the expectation of capital appreciation. What happens when we invest is basically capital appreciation. That is the expectation as well. Now, there have traditionally, even side by side with traditional investment options, there have also been a few alternative investment options, such as what we have in, art investments. People collecting artwork as pieces of investment that they can sell many years later, and the value of that asset has appreciated so much after so many years. So these are collectible, in the collectibles being invested in. These are not traditional investments, but these are also not very new. They've always been around for quite a long time. Art pieces, even investment in wine. There's also investment in coins and stamps. So these are very interesting alternative investments that we have come across. Now, a very important offshoot of these alternative investments, and which has always been in the background for quite a few years now, is ESG investment. What is ESG investment? I'll take you through that. Excuse me. Yeah. ESG investment is basically environmental, social, and governance. These are the three letters, all right? ESG stands for environmental, social, and governance investing. It is also now being, termed impact investing and sustainability investing. We'll get to those terms very soon. Because of the nature of, ESG investments, these have not been gaining a lot of visibility in the investment industry for many years now, primarily because the traditional view of investments being, a source of income, a source of growth of wealth, has always been, attached to this industry, to the investment industry. And it has taken a lot of effort for investors, for the market itself, to direct investments towards more socially responsible kind of investing. And that is where ESG is, ESG comes into the picture. Because of its nature, ESG, like I said, it has only been growing in the last few years when climate awareness, environmental awareness, social responsibility awareness, all of these have taken a little more prominence, have come into more prominence only in very recent years, especially in the corporate sector. This has been very recent, fairly recent trends. When I say recent, I mean 20 years, 15, 20 years. It's not like the last 5 years or anything, right? So environmental, as the name suggests, it is related to investing in companies that are environmentally conscious. Basically, companies that do a little bit of environment of, how do I call it, in terms of doing something to reduce their carbon emissions, having initiatives in their company to raise awareness on climate change, or doing things in the community, getting out there in the community, and it's something as simple as raising, or say, having employees run a cleanup drive in the community that they're placed in, things like that. Very simple. That is, companies usually also have something called the CSR initiative these days, which is a very a prominent factor nowadays for investors, because especially investors who are socially more conscious of what they're doing. Now, that is what E of ESG is, and I'll get into a little more detail on ESG here. Before that, let me also say that here in the ESG investment area, in sustainability investment or impact investing, when an investor says that they want to focus on the society, on positive impact on society, that does not mean that they are completely, staying away from or negligent of the kind of returns that they expect from that industry. Returns are still a priority. Profit is still a priority. However, with the view of positive change in society as well. All right. Now, yeah. A recent example. Now, let me also give you an example here with related to environmental aspect of ESG investing. Now, recently, last month, we had the United Nations had held the COP26 summit, which is, a summit that is attended by world leaders, by huge investors, and a lot of interest. Now, when an institution such as the United Nations holds such an event, you can understand what the level of importance that ESG or environmental factors are gaining. The ESG industry has grown to become something as huge. It has assets in the nearing $45 trillion. So that is huge when you consider the amount of investment. When you consider that the amount of investment that has gone into a sector like that is so huge, right? Now I'll also give you an example of how a company that has lost favor with investors can be affected by that kind of a loss of favor, right? For example, a very prominent example are, you must all be familiar with the company called Volkswagen. Volkswagen was supposed to, adhere to the principles of an act called the Clean Air Act. However, in 2015, I believe, I'm not sure, but in 2015 is what I'm remembering it as, the US Environmental Protection Agency found out that Volkswagen has been cheating on its environment or emission regulations. The company was supposed to reduce its carbon emissions or its emissions from the vehicle emissions, but the company had it fitted a device in its diesel vehicles in such a way that it would give false results. It would give lower count in terms of the emissions. Now, what has happened with that is, following that, is that Volkswagen was obviously, it had to pay huge amounts of fines, and the industry really. It also resulted in the regulators coming and checking in other companies, checking the emissions of other companies, and a lot of companies did get implicated for investigations following that. But a major impact that Volkswagen felt after this event is the loss of investor trust. Now, what happens when investors lose trust in what you're doing in the company's in the company's policies? It basically loses out on future investments, right? So this is the level of importance that that investment and investor sentiment has. Yeah. Okay. So, and now we'll go to the social aspect of ESG. Yeah. The social aspect of ESG is basically about how a company can improve its social impact. What is the company's policy on diversity inclusion? And by diversity inclusion, we mean a lot of different categories: gender diversity, the LGBTQ plus community, for example, or the disability inclusion, or we also have racial inclusion. All of these different varieties of social aspects. How does a company, what are the company's policies on these social aspects? How does a company help bring up traditionally downtrodden sections of the society, right? Now, this is a very important aspect of ESG, because it's now when we look at environmental aspects, these have been around for quite a bit, and there have been a lot of policies around environmental, environment-friendly policy implementations by companies. However, when you look at social, this is much more recent, and the kind of kind of impact that we're seeing has been very, very recent in relation to the environmental aspects of it, right? And so what is the primary logic behind having a social, aspect, or behind considering the social factors that a company takes in? When you as a company are not discriminating in society, or when you are inclusive, when you emphasize inclusion of different society, or of different sections of society, you're also contributing to social upliftment, which is a very important aspect of ESG, or impact investing nowadays, because that is important. Every level of or every section of society needs to come up, so that there is in terms of stability of society. That is how stability happens, when everybody is coming up, or when everybody is on an equal footing, right? Now we will come back to the social aspect in a little more detail once I cover governance. Governance is basically how the company's board and management, how they are effective in driving positive change inside the company, within the company. All right. What are the company's policies regarding work culture? How does management interact with shareholders? All of these aspects come under the governance aspect of impact investing. Now, these are important to investors because these policies of a company give the investors a view into what kind of relationship the investors can expect with the company if they take forward an investment deal, right? So this is the government aspect. So together, all of these ESG themes basically have impact workers of the company, shareholders of a company, customers. In turn, all of these together, they have an impact on the communities, and separately on the environment as well. All right. So this is about the ESG theme that we have been seeing in the investment industry in general. This is a very fairly recent development in terms of relatively recent development, and so that's why I thought it would be an interesting area to look at. Now, the social aspect, social investing, there is a part of ESG investing that also looks at tie-ups or partnerships with academic institutions, right? What is the primary focus of an investment or an investor or an industry? When we look at that, it would give you basically it would say devising solutions that are of near-term monetary value. That is the primary focus of an investor, right? Now, an academic focus is completely different. It relates to building new knowledge through research and imparting education to students. Now, if you look at both of these different focuses, they're completely in different directions. But however, what if there was a collaboration of these two different focuses, right? Now, one of the key results that an investor expects with what they've been doing with all of their tie-ups with academia is that they can the kind of yields that they can break through into, the kind of results that they can develop through their tie-ups with academia. The research functions of academic institutions have been an area of interest for investors for quite a while. And let me take the example of a recent example, actually, of what our Indian government has been doing with the IITs in the IITs of here. So recently, I think not recently, this has been happening for a bit now. The government of India had started, research parks, very state-of-the-art, world-class research parks, like you have your business parks. They had research parks inside the IIT Bombay and I think it was the IIT Madras campuses. Now, these initiatives, the kind of results that the investors as well as the research functions of the academic centers of the IITs, basically, the kind of results that they got was very encouraging. Now, one, because the companies, the investors were able to derive the kind of research of skilled youth, the kind of research areas of that the academic institutions focused on. They were able to access that kind of research, which may not have been possible just with industry specialty or specializing in a set industry, right? And they were also able to access the skilled youth of these institutions. Now, for the academic institutions, it became a very good way of interacting or accessing industry level skills, the specialists, the specializations that the industry provided, right? Now, because of the success of this program, the Indian government has also decided to actually extend this program to other IITs. I think I believe the Delhi IIT, the Kanpur IIT, and a couple of, there's also the Indian Institute of Science here in Bangalore, which is also supposed to start a research park of similar nature. So this is a very interesting take on industry, academic center, academia partnerships, right? The IIT story is a success story. Now, let me also present to you a little bit of a mixed bag kind of an investment story. Now, we all know Bill Gates, and we all are aware of the kind of work that he has done in terms of, he runs the Bill and Melinda Gates Foundation, And the foundation has been very active in, developing healthcare facilities in third world countries and in less developed countries or developing markets. So one, that is the, that has been, a primary factor that has worked in favor of Bill Gates, institution, as we can call it. Maybe he has also, he has also been very active in setting up COVID-19 research facilities and even not just COVID-19 vaccines. His area of interest has always been, has not always actually, has also been into like the medical or healthcare sector, and primarily vaccine sector. Now, he's also, I think, made that in connection with that interest in the vaccine sector. He had also provided funding to a lot of institutions, which is where we, talk about industry academia tie-ups here. Now, a very interesting aspect of this is the fact that he comes from a background of software, as we all know. And that software background has also given him, has also set that mentality of intellectual property ownership or intellectual property right ownership, right? And in the field of software, that is fine. Because, he and his people have worked very hard to develop the Microsoft enterprise. They have, so that is a fair, kind of intellectual area of investment or fair area to exercise that intellectual property right that he has always, the ownership right that he has, that he wants to establish. Now, when it comes to healthcare, that is not such a very, healthy practice, I feel like. For one thing, before that, let me also give a name to the kind of investment that he, does. We talk about philanthropy, and initially, maybe the Bill and Melinda Gates Foundation was founded in, or with the, maybe it was founded with the intention of philanthropy. I don't know if that is the case. Also, because if he is involved, I don't know if that is the case. But it may have been the intention. Philanthropy may have been his initial intention behind setting up the foundation, because all of his initial work is related, and even now it continues, how he's helped third world economies and all of that. So that philanthropy, now what we see is more of a capitalist bend to venture philanthropy, right? What do we mean by venture philanthropy? Venture philanthropy is when an investor puts in money into an area of interest to that investor, and while he expects to do social good through that investment, he also expects some return in from that enterprise, right? So that is, that is a healthy approach. I feel like it's not just blind charity or just putting in money and then leaving this in a scene. It's an interest in growing a certain industry. It's an interest in growing a certain, let's say, community. So that is an healthy, because all of these, a lot of these venture capitalists or venture philanthropists also put in money in NGOs. So these are enterprises that can make money. So therefore, it would not be very wrong to have a share of the profit. And also, what they also tend to do, these venture philanthropists, is the kind of money that they get from these resources, they tend to also put it back into the into that field of or into that enterprise, right? So, which is in a way a very healthy kind of way to invest. With now, what Bill Gates has done is that during his interest in vaccine development and the epidemic research, he had also given out a lot of money to a lot of research centers tied up with universities. One of them being the Oxford University. Now, we'll come back to the Oxford University story very soon. Just to also give you background on what he has done with amid the COVID-19 breakout, he set up something called COVAX. This is it stands for COVID-19 Vaccines Global Access, I believe. Yeah, Vaccines Global Access. So basically, this is an institution that intends to make vaccines available, COVID-19 vaccines available to people, to the public in general. And it was established by, in partnership with an institute called Gavi, Gavi. I don't know how it's pronounced though. Gavi would be a very Malayali way of pronouncing it, but that's okay. And it was also, I think, an institution called CEPI was also involved. The WHO was also involved in the setting up of COVAX. So all of these institutions tied up and, brought together or put together an institution that was intended to get COVID-19's available, make COVID-19 vaccines available to people, to the public, right? Now, given all of these setups that he has done, we also see another side of this story when we read about how he has continued to advocate for intellectual property rights in the healthcare industry. And he has also put that into practice with the Oxford University research story. Now, what we know as the Covishield, right, was an Oxford University developed vaccine for COVID-19. Now, like I said, Bill Gates had already put in a lot of money in Oxford University, and that money amounted to around $750 million, not a small amount. So, leveraging that donation, Bill Gates and his foundation influenced Oxford University and convinced the Oxford University to make this product, the Covishield vaccine, available to just AstraZeneca. The research data that they had made, the production rights, all of these were to be made only available to AstraZeneca, which is the manufacturer now of the Covishield vaccine. Now, this is what has happened and what in the market. But what usually the Oxford University would have done, or it had even announced that it would do this, not tie up with AstraZeneca. What it had initially announced was that it would make the research data and the production information available to multiple companies or multiple pharmaceutical manufacturers. What does that do? When you have a research or when you have data on a product that needs to be produced in such large numbers, made available to a large number of companies in the market, it basically creates healthy competition, right? Because one product is being made available by separate entities. It makes availability easier, one thing. It also creates healthy competition in the market. Because the same product is available to multiple people from multiple sources, right? And that also brings product price down, which is beneficial to the public, which is what this is called open licensing, this way of selling product rights to multiple manufacturers and not giving it to one certain entity. That is called open licensing, which is what the Oxford University had initially intended to do. But after convincing from the Bill Gates Foundation, or Bill Gates himself, what Oxford University decided to do is give the production rights to just AstraZeneca. Now, what does that do? And how does that tie in with Bill Gates' intention of intellectual property rights ownership? This whole concept of selling a product production right to one company makes the product available through only one source. So it basically kills competition. There's no competition in the market. There's just so therefore the product price can be decided by the manufacturer. There's no need for looking at other companies that manufacture the vaccine, because there's nothing similar to it in the market, right? Now, for somebody like Bill Gates, we have to also remember that he has investments also in other manufacturers of the vaccine. And these manufacturers, like, for example, Pfizer, and then I don't remember the name of the company. I think the vaccine itself was called CureVac, something like that. It's a German company that was also developing a vaccine. So basically, he has made pockets of, manufacturers, just a few key manufacturers who have the access to the technology of developing that vaccine, right? So this has been, this is kind of like an what do you call it? This is the Bill Gates conundrum that we are faced with, basically. What his investment interests are, where his investment interests lie, are clearly visible, but also what his style of investment has done to academic research facilities, right? Or to the tie-up or partnerships between academic research facilities and industry. That is a bit of a problematic example or a problematic scenario. Correct? Now, interestingly, there's another development in this, Bill Gates story. Another key area of interest that he, has basically is climate change. Now, climate change, again, is a very problematic area in terms of, there's a lot of politics involved. There's a lot of, given the social impact of ESG initiatives, when we look at Bill Gates as a capitalist, when the entry of a capitalist into such a debated field such as climate change, what does that mean for venture investment or venture philanthropy? Or what does it mean for even impact investing or ESG investing? So that's a very interesting case study that we could all maybe follow. Now, when I look at this example here, I also don't want to end this industry academia partnership study with a negative example of Bill Gates. I also want to emphasize how there are quite a few entrepreneurs out there, philanthropists out there who are actually invested in the social impact, who are actually interested and invested in social impact, in creating positive societal change. And one of not one example would be you must all have heard of the Hyatt hotels, corporate, the hotel chain, I think it's called. The hotel chain, it's called Hyatt, Grand Hyatt, Hyatt Regency, all of these hotel chains that we have. Now, this is a family-owned enterprise, right? A US-based family-owned enterprise. And this family has been doing quite a bit in terms of proper impact investing, not Bill Gates kind of investing. I'm sorry I keep going back to the bad example of Bill Gates, but it is a interesting case. It is a story on how we can do how not to do a certain thing. And there's also the example of a Brazilian young entrepreneur. He has been his family has been in the Brazilian business area. I think he's a third generation, heir to this enterprise, to this company that has been operating in Brazil. And he has been very active as well in impact investing. And all of these investors have been coming together. All of these investors who are interested in actual impact investing, they've been coming together, and they've set up they've set up institutions such as the Nexus Foundation, the Impact Foundation. So these are also very positive developments when we look at, future prospects in this in investment in the investment industry, right? I didn't want to end with the Bill Gates conundrum, so that is why I also wanted to present some positive examples. So that basically brings me to the end of whatever I wanted to discuss with you guys on the investment industry. This really is a huge sector, and like I said earlier, I may have touched just the very tip of a huge iceberg. And for somebody like me who is who's still learning the ins and outs of this field of study, I think how I got into this industry is something that Naufal wanted me to talk about. Do we have the time though? I can stop sharing. Do we have the time to discuss? Yes. Naufal has left. I think he's been a little busy.
Yeah, we can discuss.
We have time? Do we have time?
Yes.
All right, great. Okay. So he had wanted me to talk about how I got into this field of as a career option. Very simply, I have absolutely no background in numbers. I think I left maths in 10th standard and had nothing to do with financials or numbers or investment or anything. So this is a very new field even for me. I've been working in this industry for like the last 4 years, less than 4 years actually. And how I started out with my career was that I also had the intention to go out and check and look at the academic option in terms of going into professorship or the teaching industry. But then your life takes you in different directions. I started out as a content writer in a startup company, and there we made study materials for project management professionals. It's a very niche area of study again. So we were given training on the project management materials or on project management certifications and all of that, and we had to make the study materials based on these. I was also editing. Initially, there I was just a content writer, and then I also got into content editing there. Content editing there was, a very basic kind of since it was a startup, there was really not something that I could base myself on. So whatever I knew about the English language, I would do. That was the kind of editing that we did there. Then I went on to this company called Infinity Research, which did market research. Now, market research is completely different from financial research. It has nothing to do with financial research. And it's a complete different game altogether. But that company, is what taught me the basics of editing, how to go about editing, the kind of things that we need to look at in an editorial process. And also, Englishes, American English, British English, Canadian, Australian, all of these different varieties of English, how the different documents would vary. The language used in these documents would vary depending on the client, depending on where the client was from. So that was the company that taught me editing. Now, after that is when I joined Society General, the investment advisory team of Society General. And there, I joined that company because I had done well in the interview only in terms of language. I had no knowledge of financials. But that company was ready to train, and I was ready to learn. I was very, very, obviously, for obvious reasons, because I had nothing to do with numbers, and I was completely, flummoxed in terms of financials. Even now, I have confusions about taxation and all of that. So, but that company was ready to train me, and I was basically learning. You have to be open to learning is what I've understood. Any new field of study that you get into, any new field of work that you get into, you have to be open to studying and open to also approaching people who are around you and ask them for help. I think that is extremely important. So this company is where I learned all of my financials, basically. They would train me in the morning during the work hours. They would give me training sessions, continuous training sessions. And then I would come home and I would read up on my own, keep reading up on my own. They would also give me resources to access. They tell me what kind of reading to do, what kind of language to learn. Like, what do you call you call it jargon, right? The kind of language specific to an industry. So when we speak about that language, the financial sector has a lot of specific terms, and a word that means something in your normal language English usage would have a completely different meaning in the financial sector. Now, I'll give you an example. When we say leverage, right? Leverage means an advantage that you have, a support that you get, right? That is your normal English understanding. In the financial sector, leverage would mean, let's say we're talking about a company and we're saying this company is highly leveraged. What does that mean? It means that the company has a lot of debt, has taken on a lot of debt. So it's not good for the company. So this had such, language differences, jargon specificities had completely left me lost in the lurch. But as you get used to the terminology, it allows you to better understand context and better understand reports and things like that. And so that company was where I first worked with financials, and then now at Acuity, I am completely into financials. Yeah, so that's my journey in terms of career growth, in terms of career. Now, if you guys have questions, I have no idea if we have the time, but I'm open to questions. So it can, I can take questions now.
Hello, ma'am.
Yeah,
this is
hi.
Naufal here, another Naufal from the same department.
Oh, okay. Hi.
Okay. So you have been talking about industry and academic partnership or the tie-ups, bringing in the Bill Gates example. So,
Sorry? The example?
Bringing in the Bill Gates example.
Yes.
Gates.
Yes.
Okay. So the Bill Gates and Melinda Foundation, they offer scholarships like Gates Foundation and all. So there are many other scholarships as well in the field of higher education.
Right, yes.
So as you were saying, like academia as a field of investment. So is this an investment, or is this a kind of like, as we were talking about the social impact, or for the social, out of social commitment? Or is it something like to cover up their financial motives, or what do you think about it?
Now, that's a very tricky question, because see, if you look at, there's that English proverb that we have, seeing the tree for the forest and not seeing the forest for the tree or something like that, right? So if we were to look at just these investments or just these scholarships or just these initiatives that Bill Gates and his foundation takes, that is a very safe, view of him that we can have, right? It is, he's a saint that way.
Yes,
Right?
yes, of course.
He and his institution has done. I mean, honestly, that institution, the foundation, has done quite a bit in terms of, helping out third world economies that have very little access to proper health.
Obviously, yeah.
They have done quite a bit. I'm not saying this, I cannot take away what he has done in terms of uplifting society and bringing healthcare access to where it's difficult, But if you look at it, like I said, if you look at it from a holistic, perspective, when you look at it from different aspects, and this is not my personal view or anything, there have been investigations against the foundation. I am forgetting the name of the people involved, but I can get back to you on that. And it's a very interesting case study because they have actually gone on to question what the kind of investments that he makes. Like you said, are they using these scholarships and actual philanthropical work that they do to cover up whatever other work they're doing? These questions have been raised, and there are investigations on that front happening as well. So it is that kind of a conundrum, basically. It's not a straightforward picture that you have. I hope that answers the question.
Yeah. Okay. Thank you.
Yeah. You're welcome.
Ma'am, I'm Aslamia from PSMO College.
Hi.
I don't know, it's a lame question, but which mode of investment is more profitable among these ESG or socially responsible investment or impact investment?
Okay, so for one thing, are we talking about personal investors, like retail investors like us, or are we talking about institutional investors? There are different categories of investors, and for each of these categories of investors, the intention behind their investments can be different. Like for retail investors such as us, we would invest in something that gives maybe long-term gains. That would be the primary purpose of our investments. Now, when we look at an institutional investor, such as, for example, Warren Buffett, he has huge amounts of funds, but those funds are not all his. Basically, he deals, or his funds deal in the monies of many different people. So the intentions of all of these different investors, he may have to take care of, or he may choose, depending on the kind of agreements that he has with his investors. Or by him, I mean his foundation, his institution, his enterprise, the Warren Buffett Foundation, I think it's called, I'm not sure. But so what they intend to do with these investments is that will give them the direction in terms of what kind of investments to do, the kind of goal that they intend. Now, if their intention is long-term goal, long-term gains from the investment, right? Then let's say they would invest in some high-risk companies. High-risk companies, as in companies that may or may not pay you back in terms of pay the money, investment or profits back. But when there is high-risk investment, the rate of return that they get on these high-risk investments is also higher. Now, what investors usually do is they, like Warren Buffett says again, have a lot of, not to have your eggs in one basket, right? You diversify your investments. So that gives you higher chances of a more stable kind of return. So basically, when you, for retail investors such as ourselves, we would go through, let's say, mutual funds, or some of us do go directly to the exchanges and deal in, we watch the trade and all of that. But for a studied, investor, primarily this is what they do. They use a mixed bag of investments. They put money in different sectors uh, with varying levels of risk. So the return is maybe, in the short term they would have to face losses from their high risk investments, but their low risk investments can keep them afloat in the stock, in the exchange, or in the can keep their investments afloat, basically, or their returns afloat, right? So I have I answered your question? I think this is what you wanted to understand.
Good. Thank you, ma'am.
Okay, great. You're welcome. Questions, guys? Anybody else?
Hi, ma'am.
Hi.
I'd like to know if there are any trends.
Could you speak a little high? I'm sorry, your voice is not very loud.
Okay, fine.
Yeah.
If there are any trend present among the investors,
I'm sorry, I didn't hear that.
like any particular trend in among the investors?
A trend in the business?
Yeah, among the corporate investors.
Okay, so the trend that I spoke about, ESG investment, that is the biggest trend that is happening right now. Impact investment, sustainability investment. This is one of the largest movements that is happening right now. When we consider environmental aspect of it, like I said earlier, that has been happening for a few years. But social, impact investment, that is a fairly recent development. And companies are involved in CSR initiatives. CSR is a small part of their social initiative, social impact, right? Larger decisions in terms of social impact investments also involve hiring decisions. Like when you recruit people into the company, the we look at women, hiring women into the company, qualified women, of course. But for example, every industry or every company, given their rating, given their presence, or their what do you call it, their presence in a certain sector. Let's say it's a huge company like Apple, for example. The requirements for social hiring, socially impactful hiring, will be higher for Apple, for a company like Apple, which has already got such an established image. For example, let's say, I'm not sure about the numbers, percentages, but some companies are required to have at least 30% female representation in their management board. Some companies, I'm sure for Apple it's a lot higher, because it might be even as big as 50%. I'm not sure about the exact number, but usually companies with a significant presence like that, they have to hire, or they have to diversify their hiring like that. They have to make sure that they take in people from a variety of backgrounds. For example, racial backgrounds are important. Gender diversity, like I said earlier, these are important. So these are fairly recent trends that are happening in terms of investors. When investors decide to put in their money, they look at these aspects of companies nowadays. So that is the reason I emphasize the ESG aspect as a trend that is coming up. Has that answered your question?
Yes. And
Okay.
just one more thing.
Yeah, sure.
This social responsibility and community service.
I'm sorry, your voice is very low.
Is it okay now?
Yeah, yes.
Okay. This social responsibility and community services
Mm.
that multinational companies provide.
Mm.
Does this have any impact among the investors?
Yes, absolutely, yes. So investors, when they look at putting in their money into companies, they require a set of documents. And in these documents, some of the most important initiatives that the company has to show are CSR and hiring and all of that. They have to show, when companies, if you look at the annual reports of well-established and well-recognized companies, the annual reports itself, they mention the kind of women representation. I'm taking the example of women representation because it's the easiest to talk about and the most easily understood as well in today's circumstances, right? So these aspects of the company that the company is doing, they mention these in the annual reports of the companies as well, of these companies that they publish every year, even quarterly as well, quarterly, half-yearly. They actually evaluate the kind of performance changes, the kind of hiring changes that they have made during the year, during the whatever period they are evaluating, and they provide that information. They're required to provide that information. Who requires, and primarily who is the, who are the primary takers of these annual reports? The investors are the primary takers of these reports, right? For random people like us who are working in the investment research industry, these are helpful documents, but the intention behind the publication of these annual reports is to gain the interest of investors, whether it be shareholders or whether it be debt security investors. So yeah.
Thank you.
Sure.
Hello, ma'am.
Hello. Hi, Anuja.
Okay, thank you, ma'am. Actually, I just want to ask you, you didn't talk about any Indian companies. I don't know if you talked about it earlier. I was a little bit late, especially about Reliance or the Tata, what they are doing. Is there anything, what is your opinion about that companies? That companies we are hearing from childhood onwards, right? So what are
Yes.
their investment? And also, is there any foundations that are doing just like Bill and Melinda Gates Foundation? Is there any Indian foundations that are doing service to the society, education, or anything like that?
These are very interesting questions. So the primary reason that I didn't take the example of Indian companies is that I don't work with Indian companies. My exposure is
Okay.
currently limited to
Okay, I
clients
don't
that I
know
work
that.
with. No,
Okay, I
that's
don't
okay.
know.
I mean, your question is very valid though.
Mm.
And companies like Reliance, companies like Tata, when we speak about these companies, there's also a little bit of politics that's involved. And so I tend not to talk about Indian companies too much
Okay.
because it can get a little divisive. The conversation can get a little divisive, right?
Okay.
Because of the
Okay.
politics involved. But let me also say, give you one example of an Indian company, just to satisfy your
Yeah.
question. Yeah,
Okay.
we know
Okay.
Paytm, right?
Yeah, I know.
Paytm is a company that we all are familiar with. Now,
Mm.
Paytm was doing fairly well
Mm.
for whatever reasons. The kind of hype that was created around that company, the kind of performance the kind of industry that it is in, because it's a very happening industry. Fintech, financial technology, is a very happening industry. Now, Paytm recently. Until recently, the shares of Paytm were not available for the public to invest in, to buy or trade in. All right.
Okay.
I think it was in November last month that the Paytm made its shares available on the stock exchange. It conducted an IPO, which is an initial public offering. This is the way how companies make their shares available, through initial public offerings. Now, before the IPO was conducted, there was a lot of hype around the IPO, and market watchers were saying, "Oh, this company is going to do well. The shares are going to earn a lot." However, what has happened after the IPO itself was conducted was a very lukewarm kind of interest in the shares of that company. Now, why was that the case? What we have come to understand is that Paytm had a lot of advertising going on, and the hype built around it was not sufficient to actually cover up what was going on with the the insufficiencies of that company. Which is why there was an actual understanding in the market, among traders, among share traders, about the actual value and the actual ability of that company to show good performance later, or to show good results. Which is why there was such a lack of interest in the company's shares. So that is one example. I can, so investor interest basically was low in the company's shares, is what we've come to know. Now it is picking up slowly, but again, that is built on creating a kind of hype around it, creating news around the company and all of that. But still, it's slow. It was not it hasn't performed as well as the company's. I have forgotten his name, the owner of the company. He had created a lot of hype around the company. It hasn't matched up to the hype that he had created. So that is one example of an Indian company that I can, off the top of the mind, that I can recall.
Okay, ma'am.
But yeah.
Okay, ma'am. Thank you, ma'am.
Yeah, sure.
Hello.
Yes.
Naufal had to leave to attend a family emergency.
Yeah. He had told me. That's okay. No problem.
Yeah.
Yeah. He had informed me about this.
So we wait 1 or 2 minutes for.
Sure, we can give. Yeah, it's a lot of time now. 9 o'clock already. So.
Yeah.
So if we have any more questions, we can take them quickly, or if not, we can close the session. And if you guys have questions later on, just get in touch with Naufal, and I can address those maybe. Okay, hopefully, I think we can wind up. I don't see many questions.
Okay. Yeah. I think we can wind up now.
Yeah.
Anyway, thank you. Thank you for sharing your thoughts on investment culture. Indeed, something really new when we think about it from our perspective, from a perspective of literary studies.
From the perspective of literature, yes.
And I was very much interested, particularly it was striking for me, the academia as a field of investment, and academia and industry partnership and all.
Correct.
Anyway, I'm sure that all the listeners, or almost all of us, would have hopefully got something that would lead us to new research in the field of culture studies, investment as a dimension to culture studies. Anyway, drawing from your own personal experience with the industry, it was really insightful. Thank you. Thanks a lot, and thanks all others for being with us in this evening. Thank you. We wind up here.
Thank you, Naufal. Thank you very much. Thank you, everybody, for joining in and sitting in so late as well. All right. Thank you.
Thank you, Adila. We are at the hospital with Dad.
I'm with you also.
Thank you. Okay. We'll catch up with you later. Okay.
Yeah, sure. All right, guys. Thank you very much. Thank you for joining in. Bye-bye.